Who should invest in your startup? Funds versus industrials. The secret to success. Find out if a private equity fund, an industrial investor, or a combination of both is the best option to finance your business. We analyze the advantages, risks, and strategies to maximize the growth of your project in the current market. In the dynamic ecosystem of startups and innovative projects, one of the most critical decisions for entrepreneurs is choosing the type of investor who will drive their vision forward. In Spain, where the mergers and acquisitions market continues to grow, the most common options are private equity or venture capital funds and industrial investors. But what is the best alternative, or is the key to combine them? As a lawyer specializing in M&A, I invite you to explore this strategic dilemma. Investment funds, whether private equity, aimed at more mature companies, or venture capital, focused on early-stage startups, provide not only capital, but also experience in scaling businesses and access to networks of contacts. Their goal is clear: to maximize the value of the company for an eventual exit, either through a sale or an IPO. This makes them ideal partners for entrepreneurs with ambitions for accelerated growth. However, their focus on short or medium-term profitability can pressure founders to prioritize financial metrics over long-term vision, and their involvement usually implies a significant transfer of control. On the other hand, an industrial investor, such as a large company in the same sector, offers different advantages. Beyond capital, it can provide operational synergies, such as access to markets, technology, or already established distribution channels. This type of investor usually has a more flexible time horizon and a strategic interest in integrating the project into its structure, which can translate into stability for the startup. The risk, however, lies in a possible loss of autonomy or in the industrial investor's interests eventually becoming misaligned with those of the entrepreneur. So what if we combine both? This hybrid formula is gaining ground in Spain. A fund can inject capital and professionalization, while an industrial investor adds strategic resources. Although it requires complex negotiation to align interests, the result can be a more robust startup, with the capacity to grow rapidly and consolidate in its industry. The key is to structure balanced agreements, with shareholder agreements that protect the founding vision and guarantee clear governance. In conclusion, there is no universal answer. The suitability of each option depends on the stage of your project, your objectives, and the sector in which you operate. As experts in M&A, our advice is to analyze each case in detail and surround yourself with legal advisors who optimize the investment structure. In 2025, the success of your startup could be just one strategic decision away. At ILP, we are experts in M&A. Focus your inquiries and challenge our AI Atenea. Complex questions, expert answers. More information at ilpabogados.com and ilpstartup.com.